And Mind Crypto here. I hope we're all having a wonderful day. And the title of the video is The Time Is Now. Remember, please subscribe, hit that notification bell so that you don't miss any further videos. Remembering, I'm not a financial advisor. You should always do your own research. And remembering, none of this information provided in the video is a signal to buy or sell. But let's first and foremost look at the crypto bubbles. And as we can see, we're down one rank to 54 with a market cap of $1.32 billion with a 24-hour volume of $25 million. Currently price sits at 109. So last night we saw a bit of a flash dump and it dropped down to around about $108 from where we were yesterday. We are currently 1.4% up in the hour and 4.7% down in the day. But in the week we are up 6.4%. I'm not bothered about the flash dump. I'm here for the long term. There will be people out there absolutely panicking, wondering what's going on. But now is the time. We are in that accumulation phase. These prices, for me, I'm still buying. These are still good prices for quant. So if we move over to crypto quant, as we can see here, current exchange reserve sits at 1.375 million. So not a huge rise from yesterday, but my main focus at the moment is this widening of the gap and currently just sitting around about the same. But I like to look back to here when we were looking at July 30th, 2021, where this gap, the similar gap was here, and we can see the rise all the way up to its all-time high, which we can see around about $400 here. And we see this same sort of similar pattern, and we like trend. Trend is our friend. If we see this, is this something that's going to take place over the next couple of months? I really do hope so, and we'll start to see a rise and more adoption within quant. And we also see over here, we saw an exchange net flow, which basically is what's coming in and what's going out. And we get the mean average. And what we can see here is minus 3,226 at present. We want to see this keep going down so that we're seeing more and more leave the exchanges and more sitting within these private wallets. And this brings me on to this post that I popped out last night. I'm keeping a very close eye on what's going on with the large wallets. And as we can see here, Quant, another large transaction from CB10 wallet in the last day. 3,924 Quant, a value of $465,000 within this wallet that only holds quant. I believe something's cooking because as you can see, this transaction is absolutely huge. From here, we're seeing this big accumulation all the way up. It's almost the wallet in itself is almost doubled from this point. Now, who's the wallet? We do not know, but is it a corporate? We don't know. Is it Coinbase just storing some of these coins for legacy when they want to come on board? We don't know, but we can watch these wallets. And I've been watching several, around about 10 different wallets that are accumulating only quant. Now, that sounds a bit sus to me, but I am watching them like a hawk. And I see this post from Quant. They drop out an advent calendar post every day up until Christmas, and we are on day 11, Quant Advent 2023. And we, behind today's window, we look at Citi's report on tokenization. And I found this very interesting. I'm not going to play the video because I think there's some copyright music on there, but let's have a read of what it's actually talking about. And we see Citi predicts 4 trillion of tokenized assets. Now we know that Gilbert Verdian was on stage with Citi discussing all things technology and CBDCs, tokenization, and all the rest of it. So I always think these are little crumbs that they like to deliver us just to get us puckered up. And we can see here, banking giant expect 4 trillion to 5 trillion of tokenized digital securities and 1 trillion of distributed ledger technology-based trade finance volumes by 2030. This is why I am so positive on quant up until not just this next bull run, but beyond. The US-based Citigroup Inc. released a report last month that outlines the future for asset tokenization and blockchain economy. In the report, money, tokens, and games, blockchain's next billion users and trillions in value. The bank articulates an inflection point. Now, that word inflection point seems to be highly prominent within the sector, and I keep hearing it often, where the promised potential of blockchain will be realized and be measured in billions of users and trillions of dollars in value. Citi expects tokenization to be the main driver in the blockchain space, one that will mobilize the entire industry into mass adoption. It reports and predicts that tokenization of financial and real-world assets could be the killer use case, driving blockchain breakthrough, with tokenization expected to grow by a factor of 80 times in private markets and reach up to USD $4 trillion in value by 2030. We forecast that 4 trillion to 5 trillion of tokenized digital securities and 1 trillion of distributed ledger technology-based trade finance volumes by 2030. Of the up to 5 trillion tokenized, the bank estimates $1.9 trillion will come in the form of debt, $1.5 trillion from real estate, and $0.7 trillion from private equity and venture capital, between 0.51 trillion from securities. The future of money, much of our focus at Quant is on digital currencies and payment systems because we believe they hold enormous promise. Citi's report endorses this, stating that a key area where blockchain DLT will make a significant impact is in digital money. The world of money is being turned on its head, and with central bank digital currencies coming our way towards the second half of this decade, with many CBDC projects being partially DLT linked. Get ready for CBDC versions of the Euro, British Pound, Indian Rupee. Together, these four jurisdictions constitute more than 25% of the global population and 22% of global bank deposits, writes the bank's analyst. Hence, we think CBDCs could have at least 2 billion users and 5 trillion plus in circulation. Half could be using partly DLT linked models. Why is the US's third largest bank so bullish on CBDCs? It offers 4 key takeaways, and as we can see here, more big countries catching up. Initially, only a few smaller island nations and Nigeria launched CBDCs, and China was in advanced stages of researching and piloting a CBDC. We've got billions of users. Taking into account only Europe, India, and the UK, there are about 2 billion individuals and businesses that could be using some form of CBDC. We've got the technology. Until now, only the smaller CBDC projects have been based on DLT. Then we've got money mobilized. Central banks estimate up to 20% of deposits could transition to newer digital money formats. We could have $5 trillion of CBDC circulating in major economies in the world in this decade. All getting very, very exciting and moving forward very, very quickly. The world's assets will be tokenized. Currencies are not the only type of asset to benefit from tokenization. This report makes it clear that Quant's conviction about tokenization is well founded too. And as we can see here, almost anything of value can be tokenized, from wine to financial assets to everything in between, writes the bank's analyst. The significant benefits of tokenization, especially for private funds and security, will likely drive demand-side uptake, leaving behind expensive reconciliations and settlement failures while embracing operational efficiencies, fractionalization, and accessibility to a wider range of market participants. Beyond private market tokenization, we expect 1 trillion of the repo securities financing and collateral market could be tokenized by 2030. And it goes on, the path to the future. How can the industry achieve the benefits of blockchain? To Citi's analysts, mainstream adoption requires enablers including decentralized digital identities, zero knowledge proofs, oracles, and secure bridges. Legal plumbing is also essential, as are regulatory considerations to allow adoption and scalability without hindering innovation. And this is really, really interesting because I'm hearing this word, inflection point. We are at an inflection point, and we can see over here video from Just the Tech Guy. It's an inflection point. The world is about to discover what they've been building silently. So let's have a quick listen to this.
Change the industry as a whole and transform to the next generation, which is where we are right now. It's an inflection point.
So the word inflection point, and I put out a post on October the 6th where we heard both JP Morgan, Scott Lucas, and Goldman Sachs, Oliver Harris, talk about inflection point. Now we see Citi's David Cunningham using the same wording. And as we can see here, the world of cross-border payments is at an inflection point. And we can also see here is a video they tried to take down. Massive confirmation. Big money is coming. They don't want you to know. So let's have a quick listen.
So it's clear that this market needs to come from the big players. And I think that especially here in this audience, people that have been working on it for several years have been a little bit, okay, why is it so slow? And I think that the point where we're here today is different from where we were a year ago. At this point, correct me if I'm wrong, you guys and your peers are coming in a big way. It's just happening at the pace that it's coming, and to make regulators comfortable with it.
I think that's right, and I think it's accelerating for sure.
So, as you all heard from that video intro, the representative from State Street confirming that the big players are coming. Ladies and gentlemen, I've shown you all synchronicity and key vocabulary. Do you all remember the CyberX researchers found back on September 11, 2023? The London Stock Exchange Group went on to say, head of capital markets at the LSEG earlier today told Financial Times the London-based exchange had been examining the potential for blockchain-powered trading venues for around a year and had reached an inflection point. I've shown you all multiple times in the past that these elites use the same vocabulary across the board. Listen to this representative from JP Morgan mention the same exact terminology, and listen to this representative from Goldman Sachs say the same exact thing. They mention the terminology inflection point.
Investors realize that actually digital bonds are cheaper than regular way bonds, and they kind of go, actually, I'd like to buy more of those, less of these. How do we get? And then you start to get the inflection point where that market develops. And
you know, I think one thing that's everybody knows about Goldman Sachs is that you're really good at timing the market, and in this specific market, it looks like you're quite early. And do you think you're quite early? Is it now the right time to deploy? Where do you see the horizon? What is the timeline that you see realistically for an institution such as Goldman Sachs to be able to be, in production with a tokenization solution?
Yeah, interesting. I'm hoping we're not too early. I would say, actually, I feel we're at this inflection point.
So there you go, guys. We are at a curve, an inflection point. This language has been used, and I've reported on this before with regards to inflection point. What does it mean? I believe the time is now, and we are at a point where we have the opportunity. This is why I'm taking the opportunity. This is my personal opinion. Remember, none of this is financial advice, but Quant are using it as well, the inflection point. And it's a key word that's being used with the word seamlessly and other very, very prominent language that's been used over the last year or so. So there you go, guys. Just a bit more dot connecting and really, really interesting and quite exciting for the future. Remember, please subscribe. Please hit that notification bell so that you don't miss any further videos. All the best, and I'll catch you later.